According to price action trendline rule, after there's a break of a channel, traders expect for price action to retest the new extreme. In case of a bearish channel, I expect for traders to retest the new low. Now this works 8 or 9 times out of 10. Nothing is 100% certain in price action, and market may reverse anytime for whatever reason. So I always keep this in back of my mind. As of right now, I'm still bearish. The downtrend fits really well. We are breaking the channel, but I cannot sell just yet. I want to sell a high probability setup when the chances are higher that we're going to continue working lower. Why I cannot sell? First of all, this bullish channel, this correction is still in play. You can see how nicely the candles are fitting inside. And second of all, we're above EMA. If I want to sell high probability setup, I would need to see push below EMA and a failed second entry long. Bullish trap. That is the confirmation that the sells prevailed. None of this is happening. We keep pushing higher and we keep pushing higher again. So this is already looking way more bullish than I initially expected. However, the uptrend has a breaking extreme, so I'm going to be patient, and EMA keeps holding again. Let's see what's going to happen. We have a new high, first entry long. We have a second entry long. Well, uptrend is a break new high, so I cannot go long, but I cannot sell because we're back above the EMA. So once again, this is way more bullish. At this point, it's starting to look like there may be a potentially stronger, bigger channel, and we cannot create the new low for the downtrend. And now we pushed above EMA and we formed high low. Now this is important because this right here is a confirmation setup. What's going on? The high low confirmed second entry long, and it confirmed the bullish bias. We're back above the exponential moving average, and this is first decent high probability setup for the day. High low confirming the second entry long, push above EMA, your stop loss goes one tick below the signal bar, and because the high low worked, this told me, okay, there is some stronger bullish channel, because this is not what is supposed to happen after break new high. So this is why I was eyeing some channel, and this spike in a channel fits the best. I'm just going to copy put it at the top. Now you can see we actually have even small triple test. So like a one bounce, second bounce with the high low, and third bounce with the triple test. So this is a decent bullish bar, triple test, the uptrend is new extreme. A more aggressive trader can consider this triple test because you have support, you have the EMA, and the channel needs to get new extreme. Market continues working higher, and even the spike and the channel created the new extreme. And by the way, I was also watching the 10,000 tick chart. This is the higher time frame that I use to confirm my analysis. And if you're going to look at 10,000 tick chart, you can see that the downtrend had a break in new extreme. I couldn't quite match it today with the 2000 tick chart, so for this reason I still keep it in play, but the high time frame can sometimes help you to see the structure a little bit better. I need to remember that I have a break new extreme, the trend line rule played out, so I'm not looking to go long. I expect correction or reversal. I have a new high, so I'm going to redraw the shortened downtrend. Always respect the shortened channels. And I have second entry long. Can I take the second entry long to like a pullback? I cannot. I'm using the price action rule to help me decipher what's going on in market. I can see that the shortened downtrend is in play. That's the most important piece of information. You cannot go long as long as this channel is in play. You can see how these candles highs are really allowing you to draw the channel. And more importantly, we have a break and a new extreme. So we cannot go long, and you have a failed second entry long, new high, first entry long, pullback, second entry long failure. So this is a failed second entry long, high probability setup because uptrend played out. So this means you expect correction or reversal, and it's managing to close slightly below the EMA, and it is a nice failed second entry long. This was actually very quick. I tried to take it. I just didn't get my order in time because this was so fast. You really need to be fast at this point. Okay, we keep pushing lower. Now we have such a tiny break that I'm going to widen it because I expect full blown reversal. There is no need for me to draw it tight because I'm not expecting this downtrend to be correction or some bigger uptrend. Because I have a break new high, if I'm expecting reversal, I draw it wider. If I expect the bearish move to be just a correction, part of some bullish structure, I draw it tighter. So in this case, I draw it wider. You can see still fits in play. We're closing outside, so what I expect according to trendline rule, the same thing as I expect here. I expect new low to be formed for the sellers. We are breaking the downtrend. Okay, this is going to work 8 or 9 times out of 10. We have first entry short, pullback, we have a second entry short. Can I take it? Unfortunately, I cannot, because the signal bar is inside bar and EMA is in the middle of these bars. You can see 4 bars stacked right next to each other. This is mini congestion. Even with the second entry short, at the key entry point we need to get new extreme. Unfortunately, I cannot really take it due to the congestion. Okay, price action is stalling. I'm going to redraw the short-term uptrend. You can see we're starting to go sideways, and this is what I call a no trade zone. This is mini congestion. EMA is flattening. this small setup work for a scalp, but I think it's a little bit too aggressive. And now you have kind of like a second entry short triple test. One bounce here, second bounce here, third bounce here. There's an uptrend with the break new high, and more aggressive trader can consider selling this triple test, which is also a second entry short. Why this is more aggressive? Well, because you're still part of the congestion. I recommend for more beginner traders just stay out of this, especially since the day just started. It is not worth to be risking it, but price action wise, triple test, break, attempt to create new high, and you trade it down, which means we need to get new extreme for the downtrend. So your bias is bearish, you have the downtrend on your side. Your stop loss goes. One thing about the single bar, you have to write this out. You can see there's always a noise and pullback in price action. Not always, but it can be. So you cannot monkey with the stop. Don't be afraid of having losing trades. Sometimes traders, they will move their stop loss because they don't want to take the full hit and will stop them out only to see it go exactly where they thought it was going to go. Always put it one thing about the single bar. You're protecting your trade, and market created new extreme. Perfect trend line rule. Market is reversing. I'm going to redraw the short-term uptrend. Okay, we have a break in new extreme again. Price action is working lower. I'm going to redraw the downtrend. And you can see the bias right now is not getting clear. So what I have to do, just try to find some trading range. And I was also looking for some bigger range like this potentially, because we are right now going very sideways. You can see flat EMA, spike down, and the trading range. And we are right now in a small trading range as well. Failed breakout here, failed breakout here. In trading ranges like this, you want to buy low, sell high according to price action rules. Wait for trends to play out, buy low, sell high. I don't see any clean setup. No good failed second entry short, no good trap. I'm going to redraw brand new uptrend. I have new extreme. No clear bias, just very choppy. Trading range is not clear as well. When I don't have everything aligned, context, key entry point, and no good high probability setup, I'm not even looking for entries. I'm not even looking for setup. I need everything aligned. Okay, but I can see there's slight bullish bias. Price action keeps working lower. And notice what happened, push above EMA. And this is important because if I'm going to connect these swings at the bottom, copy it, put it at the top, notice how nicely it fits. Geometric formation here and nicely geometric formation here. Notice how price action is telling you there's something going on here. Why are these candles bouncing in such a geometric formation? So this will set up the trend line, this will confirm it, start of a channel, came back, tested again, wide the channel, and price action keeps pushing higher. So now what I was thinking, I expect second entry long because we have a new high, first entry long, and because we pushed above EMA, that's confirming this wider channel. Can you get a second entry long? We have a second entry long here, but the signal bar is bad. There's a tier 4 signal bar, bullish bar. I cannot go long above this bar. I really wanted to see nice bullish bar. If you see bullish bar here, you have to go long. Uptrend is confirmed, second entry long above EMA, and look at it go. What a great trade this would have been. Unfortunately, the signal bar didn't really finish well. And notice what we have here. We have small congestion. How do we identify congestion? A lot of bars stacked right next to each other in a sideways direction, which is exactly what this is. And how do we trade congestions? We fade the breakout with the direction of the trend. If it breaks higher, I'm not fading. But if it breaks lower, fading means trading it in the opposite direction of the breakout. Breakout was the downside, so because we traded up, we were breaking the downside, I'm gonna fade it. I wanna see it go back up out of this congestion. And you can see, we are at the EMA, and it's a new high, micro double top, first entry long, pull back, second entry long, and second entry long is also failed breakout out of the congestion. At the EMA, great signal bar, take one ticker lower, trap all the sellers, fading the breakout, selling the breakout directly into the EMA. The trend is up, the trend line is confirmed. Once you see this confirmed channel, you're just looking for high probability setups to go long, and this right here is a great high probability setup because everything aligned. The context, which is bullish, you have the channel, you're at the EMA, and you have high probability setup. How do we know it's a high probability setup? It's a second entry long, and you combine it with the full breakout. So many reasons to enter, and look at it go. And we have small overshoot. Trend line is going to come from here and here, and overshoot is overbought territory. It is tiny, but you can see the last bullish depletion spiking through the channel. And because this is a rangy market, I'm not going to be widening my channel. If I was trading pure uptrend, I can widen it. But in rangy markets, I prefer to keep the channels tight. So you have overshoot, which means I expect stronger correction. If there is going to be a second entry long at the EMA after overshoot, I cannot take it, okay? Because overshoot can generate break of a channel or reversal. So I'm going to redraw short and downtrend. You have a new high, first entry long, big second entry long, but you cannot take it. It's too far up and it's after overshoot. Okay, and this is first leg down. Market moves in pairs of two, so you can get second leg down. You have a second leg down. Market keeps working lower. Now, our main channel is getting broken, according to Chen Lao rule. So I expect new extreme, new high. Because I have overshoot, in order for me to go long, I want to see push above EMA and a failed second entry short, okay? It's pretty much always the same thing. You can see I'm always doing the same thing. If I had downtrend working lower and I see correction, I want to see push below EMA and a failed second entry long below EMA. If I have uptrend working higher, I want to see push above EMA and a failed second entry short above EMA. Okay, we have overshoot and notice what happened. And this was cool because you tried to push above EMA, you got reversed, and I can see that the wider channel fits really well. So because I can see this wider channel getting confirmed, I'm going to combine it with the overshoot and notice what we have. One top, double top, triple top, and it's a second entry short. So this right here is a second entry short and triple top, but the signal bar is doji. I was ready to take it if I got better bearish bar, so I have to mark it only as way more aggressive. But because you can see there was additional swing here and this bounce lower confirmed it, so this tells you, okay, overshoot is going to be a little bit stronger, great second entry short triple test, but signal bar is very neutral and market created another overshoot. So what do we expect? Stronger momentum in opposite direction. Okay, we're breaking higher. Can we get a failed second entry short, second entry long? We cannot. And market created new extreme according to Chen Lao rule. Perfect. New high was reached. This means I'm pausing my longs. Okay, however, because we've been trading higher for such a long time, I'm not looking for reversal just yet, even though it is working for a scalp. Not interested. We have a break new extreme. Okay, we're pushing higher. I'm looking for a failed second entry short, but I cannot get it. Okay, everything is too far up. No good setup here. Okay, we can see highs here. I'm going to redraw the resistance. Possible support somewhere here. I'm not really sure. I'm going to just follow the shortened channels. Always follow the shortened channels. Your break, new low for the downtrend. Market keeps working lower. And this is where it was quite confusing. Notice if I'm going to zoom back, how is the structure reacting? You cannot deny this is some form of uptrend. It's weak to medium uptrend, but it's some form of uptrend because every single major low is higher than the previous one and every single major high is higher than the previous one. Okay, so because this was such a massive push down, I was going back and forth between wider downtrend, is this break and a new low? I wasn't sure, so when I'm not sure, I'm going to observe the EMA, what it's going to do. And you're breaking higher. Like I said, I kept going back and forth. I wasn't really sure because you are staying above EMA, but you don't get failed second entry short, you're back below. So this is where you have to be patient, but now you're back above. And this is important. Okay, price session keeps working higher, so I'm going to redraw wider uptrend because this one has a small break, new high, new high, new high, so many new highs. This tells us there's probably a bigger pattern on the first entry long. Okay, I have a new high, first entry long, second entry long, but this second entry long formed below EMA, so I cannot really take it because it is below EMA. And notice what we have. We have new low, first attempt to sell, pull back, second attempt to sell, failure. If there's going to be a break above this bullish bar. Why are we thinking about second entry short failure? Because this uptrend needs to get new high and you can see small support being formed. So you can combine this key entry point and a failed second entry short, and this is a great high probability setup. You can see how sellers are struggling to break this because the channel needs new high, and this is a great failed second entry short high probability setup. You put your stop loss one tick below the signal bar, you enter close, and look at market go. You could have catch a significant runner. Now, you break new high, or I was even watching potential wider channel like this. And you can see we have another overshoot, just like we had to the left, which means I expect stronger correction or possible reversal, and market continue working lower. Now, I took a look at the 10,000 tick chart, and because we bounce here and push back into the string range, this is where I try to align the bigger channel with the 10,000 tick chart. And if I'm going to cut the corner here, the early break, this is the bigger channel, and this explains price action nicely. This shows us that every single low and high is higher than the previous one, and we are trading weak to medium uptrend. This gives me a bullish bias. So I'm not expecting to sell. I want to see the bearish correction play out, and I want to see push above EMA and a failed second entry short. So there's no failed second entry short here because downtrend is new low. Okay, now we have new low. The trend line is coming into play. Okay, we're pushing above EMA, and what am I expecting? Failed second entry short. Because I would be buying at the bottom of the channel. This is what I want, because there's always a push phase, correction phase, push phase, correction phase. And this is a weaker channel because it has broad pullbacks, bearish pullbacks. So the lower I buy, the better. And this is a lot of times when you are trading a weaker to medium channel. The lower you buy close to channel, this is where you can catch a massive runner all the way to the upside. So this is exactly what you're looking for, because downtrend played out with the break new low and a brand new push phase may start again. The failed second entry short form, but unfortunately below EMA. I want to see push above EMA. I don't know how strong this correction is going to be. What if you're going to get break higher, lower high? No, I want to see push above EMA that never formed. This looked like it's going to produce a solid bullish bar, and it looked like visual tool like a pullback at 3 key entry points, but it ended up doji. Unfortunately, I can't take, but you can see the power of key entry points, channel, EMA, and the support. Market keeps working higher. I have overshoot. You expect stronger momentum in opposite direction. Market keeps working lower. I'm not thinking about selling because we are inside of bullish channel. Break, new extreme, push above EMA. So I'm looking for the same thing I was here. Buying low, high low or failed second entry short. And of course now it's getting too late. So I'm going to pull the chart enhancer back. I'm going to zoom back. And this is the overall structure. And we can see clear bullish channel working higher. You can see this is typical how price action likes to move. Push phase, correction phase, push phase, correction phase, push phase, correction phase. You can see at the bottom here, you're looking for the high probability setups, break new low, and push above EMA. So there's always a reason to price action. And you can see the channels work perfectly, even the overshoots, just that the first channel was rather confusing. I was still thinking more bearish, but price action never managed to push below EMA. And it's a big sign. Especially if this second entry long pushed back above EMA, something is wrong here. This is not supposed to happen, and this high low basically confirmed this spike and a channel pattern. And at this point, you have to sit this area out because this is just no clear bias, indecision, and eventually channel got confirmed, and there were a couple of high probability setups. So I'm going to wrap it up. I hope you had a good trading day. I'm going to talk to you next time. Good luck with your trading.